Well, thanks for tuning in to this budget special. And we've absorbed the budget and had some time to analyze this interim budget, which was, in the words of my guest, an interim budget by virtue of the fact that it didn't take too much time for the finance minister to deliver what she wanted to deliver. Our guest today, a very special guest, Mr. Madhusudan Kela. Mr. Kela, thanks so much for taking the time out and being with us in our studios.
Thank you for having me.
No, the pleasure is entirely ours.
Thank you, sir.
What did you make of the budget? Did anything surprise you?
I think overall budget was very good. I think surprises were all on the positive side. Honestly, starting with the fiscal deficit of 5.1%, and more importantly, the adherence that in 2026 it will be below 4.5%. That I think was it was music to the ear, and that was like a positive, more conviction building thing. Second, of course, the absolute amount of fiscal deficit number being lower than this year. The absolute borrowing being lower than this year. This is after many years that would have happened, that the net borrowing from the government is lower as compared with the previous year. So I think it is a clear-cut fiscal consolidation path by the government. It's a good thing. It's not a surprise, but if at all, it is a positive surprise.
I agree completely. Yeah. So some people classified this as a budget for the bond markets, the bond budget, because yes, the bond markets had there's lots in it for that. Is it incrementally positive from an equity market perspective as well? Because capex numbers, while at 10% or 11% growth, and maybe the net is 16-17% because they may not meet the increment of the target of FY24, but the percentage growth is lower than last year, so on and so forth. So is it incrementally?
No, it is actually quite positive, Niraj. If you look at we can't look budget as only an event, right? Budget is one of the events of the economy, right? But if I look at, let's say, the bond market, if they do well, interest rates goes down, right? Ultimately, it is a very big benefit to the equity. And also don't forget that at least $25-30 billion will come next year because of the JP Morgan bond index, right? Now, if that kind of money comes in, there is the first time we can actually make a case for currency appreciation. So what does that do? Falling interest rate, appreciating currency, stable inflation, what does that do to equity and equity valuation, right? Obviously, it is a big benefit. So I think these are all like two wheels of the same bicycle, debt and equity. It can't be bifurcated that anything which is good for the overall economy will only be good for equity and debt. Having said this, of course, debt had lot more direct benefit than equity in this budget.
Got it. Okay, so point well taken. So it's positive maybe for both. Debt may have been the headline. In some sense, did you? And now we also probably need to talk beyond the budget as well, because as you said, it's a bit of an event. But just trying to understand, in some sense, do you think that the government has put the gauntlet in the hands, let's say, of let the fiscal policy, the fiscal work is done. Now let the monetary policy also chip in and do its work. And two, even on the capex front, the government saying that, we've been front-loading capex by aggressive growth in the last 3 years. Now let's also see the private capex and the household capex come up and do
I have a different perspective on this capex number. If I take on 9.5 lakh to 11.11, I think this number for this year may not be more than 9.5 lakh crores.
Agreed.
Right? So it is already 16-17% growth. But don't forget, government will only work for 9 months in the next year, because Achar Sanhita will be there because of election. So 3-4 months there will be no work, there will be no tendering, there will be no capex item which will move.
Got it.
So it is not what the government wants to spend, it's also what the economy can absorb in a particular time frame, right? And the other thing, they have understood one thing. It is like a corporate. You underperform, you underpromise and over-deliver. So they, of course, over the last 3-4 years, all of us have got now comfortable. No one is reading in between the line in the budget, because there is no googly which comes, right? So they have established that credibility. in order to say that, whatever government says, we can trust them, right? So that is the reason, it would not have taken them to say that, okay, we'll put a number of 12 lakh crore rupees of capex. But they know that, and even if they put 12 lakh crore rupees of capex, the fiscal deficit in point of 5.1 would have been 5.4. I don't think world would have taken it any otherwise. People would have been still be happy. 5.4 is a good number to have. But they did not do it, according to me, because they know it is impossible to spend 12 lakh crore rupees in 9 months.
Interesting point. Okay, very interesting point. The other aspect, could it be, just wanting to understand that it's also played to a global gallery, that here we are a nation which is growing at 7.5, but we are adhering to fiscal deficit. We are lowering down the fiscal deficit, showing the glide path, lower borrowings, significant capex, as you said, and all of that. So come and invest in India, because you might have missed the bus the last year.
Yeah, absolutely. And again, when we look at in the context, Niraj, this 11.5 lakh crore looks small. But if I extrapolate and just take 10-12% growth every year, maybe in the next 7 years, government will end up spending 1 lakh crore rupees. And that's a very, very large number, right? So cumulative, when you see the effect, it is a very large number, and it's a clear signal and you see one slide in the budget. They have shown that the dollar term growth of the economy this year is expected at 10.5%. This is the first time they have spoken about the dollar term, not rupee term GDP growth, dollar term GDP growth rate. So it can really hit that class of foreign investor, wherein other economy on a nominal basis are struggling to grow 4 or 5%. Here is a country which is confident to grow 10.5% their GDP in dollar terms.
Right, of course. No, this is an important point, because I was just asking you, right, that have they kind of played to the global gallery?
It is. They know that, money has to come from there. If this is just one bond index which we've got included into, there are 3-4 other very important bond index. The country has to upgrade the credit rating so that we can attract a lot more money on a more holistic basis. Not only FII flows, but FDI flows, bond market flows. And once the liquidity comes, that is when, Niraj, you see yourself, if $40-50 billion comes through the bond market, what will happen to the currency? This is a new money which was not there in the market, right? And to that extent, RBI will have to release rupees. So that liquidity will be there in the system. And that liquidity will serve the purpose of the bond market, it will serve the purpose of equity market, it will serve the purpose of entrepreneurs. It is a spiral, right? You put 2 lakh crore rupees because you get dollar and you pump in that kind of liquidity in the market. It will do lot of good to a lot of section of people in India.
So, मुझे ये तो पता है, Mr. Madhu Kela was bullish all through 2023, and it's on record. आपने बहुत बार बोला है. Are you after not that the budget, you needed the budget to make you more or less bullish, but the budget, as you said, or as somebody said, could have had speed breakers. It hasn't. Has it made you more bullish, or is Mr. Madhu Kela more bullish now?
So I will tell you honestly, the way I look at markets today, that there are plenty of opportunities in the market on a bottom-up basis. But it is also the time to be careful, because we have made so much money in the last 3 years, and people's expectation is so skyrocketing that people are not talking of percentage term. If you tell someone like you make 15-20% return, he will see that which age are you living in. So the expectation of people is very, very different, and obviously there is clear discomfort in a lot of pockets as when it comes to valuation. So it is also the time to just take a step back, make sure that, Niraj, there is only one thing which all 800 crore people want to do in the world, and that is to make money. That's the only place where people are unanimous as humanity, right? So I would say making money is never easy, but this time around it is even more difficult because of the kind of run which we have had, because of the valuation, the way stocks have got valued, right? And also, obviously, the margin of safety has got reduced as compared with last 3 years. So this is a time also to be careful. Let me add one thing. This is if I look at it from a 6-12-month perspective. But if I look at it from a 5-year perspective, or if I look at it from a 10-year perspective, I am extremely bullish. And the budget has made me even more bullish because there is clearly continuation. And underlying, you look at the confidence of this government. In an election year, there is no populist measure. It is good for economy, good for budget, but they are clearly understanding that we don't need to be populist to win the election.
That's true.
Right? That is the confidence by which this budget is being presented. So if the government comes in 2024, once the government comes in, obviously there will be policy continuation, and I think far more work will happen in next 5 years than what has happened in last 10 years.
Well,
this I am very convinced about. So I feel, so that I am not sounding confused, I feel that markets have run up. There could be some correction. I am not making a case that there will be one correction. There could be one correction. If that correction comes, that is your only hope to get into the market. Right now the India story is well discovered. So a corrections are only hope that people who are sitting in the sideline, they can get in. And someone like me also, even if I have created 5-10% cash, that is the only hope that if there is a correction in the market, we'll plow back that money.
Got it.
Right? So from a medium, long-term perspective, there is more conviction to invest in equity, be selective, make sure that you are doing your homework properly, because there is lot of things in the air, lot of tips. Everyone has got a tip. So you should not get into the market just because it is momentum, just because it is going up. If you do your homework, still there are a lot of opportunities which are there in the markets.
Okay, well, we are dissecting budget and investing with Mr. Madhusudan Kela. We'll take a quick break, come back and try and talk about some nuance. Back with this very special budget special episode in conversation with Mr. Madhusudan Kela, who's told us that you need to be cautiously optimistic, but over a 5-10 year period, there is a strong case for being optimistic on risk assets, and his conviction is even stronger after the budget. Mr. Kela, a couple of small nuances that I thought in the budget, which may not have investing implications, but I thought they were interesting moves. For example, this corpus of 1 lakh crores being created for front-loading R&D investments, and typically the government taking such a big step would probably propel private investments into deep tech, etc. Something that India has been there but not quite there. I mean, in some sense, they have not just gone for the obvious ones which will play to the gallery, but also the deep needing ones. I mean, anything like that small that stood
some
out?
of them are very smart moves. I know, obviously, this is need of the hour.
Right.
With 1.4 billion people, there are so many smart, innovative, R&D oriented brains which are there in India, which need this kind of a support or a risk capital, right? To and encouragement from the government. Like I sit with SIDBI on their governing board on FOF, right? So these startup funds have done wonders to a lot of fund managers, and in turn to a lot of enterprises. Similarly, this will encourage a lot. But I think even a smarter piece was to do it in the form of bond or debt, right? If you did it in the form of grant, then you have to put it in the budget,
sure,
and it would have increased your fiscal deficit in that sense. But because they are doing it in the form of long-term debt,
yes,
right, it will not be part of any fiscal deficit. I don't know what the mechanism will be, but I think it's a great move.
Got it. Yeah. So a small nuance, but great. The other thing was this mention, and I don't know if there are numbers put out. Please correct me if I'm wrong. But this whole mention about the middle income housing spurt that needs to come. Now we know housing is an upcycle, but the way to boost household capex is probably through housing SOPs. Is this in some fashion, and they've said that they will give the details in July, but is this in some fashion elongating the real estate cycle?
It will come. It will come. And not only real estate, but anything which is the peripheral. See, the direction is very clear, even for the lowest criteria of the society, the way this Pradhan Mantri Awas, that is getting built, they are very clear that they have to uplift a lot of people from the poverty.
Yes.
People who are being uplifted from the poverty, they have to go to middle class. The middle class has to go to higher class. I think housing is a very big need. It's being a very latent need. And atmosphere is just fantastic, Niraj. To do all of this, government has so much animation right now, right? You know, because if you see when they inherited, at that time, you know, there was some food subsidy with FCI, there was some oil bonds with BPCL, IOC. It is all being cleaned up. And in a clean manner, we are talking of 4.5% fiscal deficit. And I want to tell you one thing. Government of India has become very rich. People are not realizing that India is a country. We have a fabulous balance sheet. We may have a poor P&L, but we have a fabulous balance sheet. 13 lakh crore rupees was the value of all PSU companies put together 3.5 years back. Today it is 51 lakh crores.
Got it.
So government value has increased by more than 25 lakh crores in last 3.5 years. What ammunition does it give them?
Yes.
You divest, you know, if 50 lakh crore is the market cap, you divest even 1 or 2%, you can raise 50,000, 1 lakh crore rupees. Yes. It can just change all the numbers on the fiscal side.
Yeah.
And none of it is being taken.
Yes. Yes.
And if there is a really fabulous majority government, what stops them from selling 1 or 2 or 3 companies on a strategic basis and really get these divestment numbers really kicking in and take that money and invest into housing, invest into uplifting people?
Yeah, so why is that not happening? Why do you think on the divestment side?
I don't think it was right to take that assumptions today, because again it was an interim budget.
No, but even the divestment targets for FY24, I mean, we are far away from
Maybe, I don't know, maybe it is by design, because they have understood that there is far much value in all these public sector companies. So why just sell them for a song?
Got it. Okay.
Right, and now you see yourself, today if you want to sell 10% of Hindustan Aromatic, you can get 20,000 crores.
That's true. You've been very constructive on PSU banks, yes, but PSUs as well.
PSU as a whole.
You continue to remain constructive.
Absolutely.
Okay.
Absolutely.
The other aspect is this whole rally in the capex.
However, I must warn you
please.
that railway stocks, to my opinion, are I'm not comfortable with particular few stocks valuation in the railway segment. So I think either they pause or they decline. I don't know what happened, or they pass some time. But there the valuations are stretched, according to me.
Got it. Okay, point well taken. But some of the others, even on the private side, for example, the capex fueled stocks, wherein this whole story of a 5-year long capex, defense, the capital good majors, etc. Do you think that story continues?
That story continues. We like the EPC space there. We feel that companies have really transformed. The balance sheets have really become very, very positive for them. The order backlog is very good. Ownership is not there. And compared to what the potential over the next 3-4 years is, they are still trading at a reasonable valuation. So our preference is to buy these companies versus buying some of the very more expensive companies to play the capex cycle.
Got it. Correct me if I'm wrong, but one of your most decorated bets in the last 12 to 24 months could have been PSU banks. One of them.
Yes.
Your most decorated bets. Are you still constructive?
Yes, I am very constructive.
Even
for the reason that, because if I look at PSU bank valuation, they are still trading at below 5p if I take a 24-month view. A lot of other PSUs are trading at 30-40p.
Right.
So there is still a large dichotomy. And also, that some of these banks will make 20% plus ROE, Niraj. Why they should be quoting at one-time book or 4 or 5p multiple? And thirdly, when you look at ownership of all of these banks, you look at any mutual fund, any IIF, any FII portfolio, it is still not representing. So there is still a lot of under ownership. And I think it is coming. For instance, Canara Bank has been a 5-bagger in last 3 years compared to any large bank which has not given really any return or very minimal return.
That's true. Actually, off budget, maybe one final question, but what is ailing the large private sector banks? They've been wealth generators for years. Somehow they've gone off the boil completely. Yeah. What's happening here, and when does it turn, if at all?
I think preliminary it is the FI flows, because FIs were significantly over-owned in these companies, and FI flows has been negative, and that has been negative for the owing to the overall emerging market. There's nothing specific to India, but because overall emerging market, there is the outflow. China is not doing well, Russia is not doing well, and that is why there is outflow. And India we are part of the emerging market baskets. So when money gets withdrawn from there, money goes out from here also. And if I have owned significantly all of these private banks also, but only because that's where they made money. So that is one factor. Obviously, the expected profit CAGR or a top line CAGR which some of these large banks delivered for the last 15 years versus what they delivered in last 3 years is also one factor. I think for me the turning point will be significant reversal of FI money. Whenever we see that it is coming, I think that will be the real reversal point.
Got it. Some off-budget conversation in otherwise budget story, but Mr. Madhusudan Kela, this was special talking to you and getting some very good insights, including that insight on capex for 9 months because of the Achar Sanhita. Not too much that somebody's spoken about. So thank you for all of this, and thank you for coming to our studios.
Thank you so much. Thank you so much, and congratulations to you and the entire team. The place looks fabulous. Thank you so much.
Thank you so much. And viewers, thanks for tuning into this very special conversation.
Hello and welcome to NDTV Profit. I am Hiral Dadia. Suzlon. That's the stock to focus on the back of numbers, the kind of turnaround that we've seen, as well as a couple of announcements that have taken center stage for the renewable energy space with regards to India becoming net zero for a net zero future. Joining us on the show is Himanshu Modi, the CFO at Suzlon. Himanshu, firstly, congratulations for a spectacular set of numbers, because from a profit number, from a 2-digit, we've already jumped to a 3-digit number this time around, close to 200 odd crores. If I look at the first 9 months in terms of profitability, overall, 440 odd crores is what we've seen. Is this the run rate that you will maintain with regards to FY24? And how do you see it moving into FY25, taking all the strategic decisions that have been taken so far?
Well, I think, given the order book that we have, which is about close to 3.2 gigawatts,